Perfect. Alrighty. Well, we can go ahead and kick it off. Some people are still going to be filing in, but that is perfectly okay. Few housekeeping items before we jump into today's discussion. We are in a meeting, not a webinar, as you've likely noticed. So that means you can have your camera on if you'd like. Also means that if you unmute yourself and you talk, everyone will be able to hear you. So please try to keep yourself muted if you are not intending to talk. Lastly, we're going to save some room at the end for questions. So hold your questions till the end. Don't want them to get lost in the chat in the meantime. So perfect. So with that, we can go ahead and jump into our panel. So today we're here to talk about uncovering climate funding and what that means for the climate job market. If you're here, you likely know that 2023 was a bit of a turbulent job market for hiring managers, recruiters, and job seekers alike. It was just a hard time to be in the climate jobs world. Climate People, a climate recruitment agency, saw all of this firsthand. And alongside that, we also saw kind of some of the pessimism towards the job market. And it was not the same level of excitement that we usually see towards climate jobs. So in response to that, we gathered a panel of experts who I will introduce in a few minutes, but wanted to have them come in and give some rhyme to reason to talk more about what happened last year to help all of you understand why things happened the way that they did, and then offer some insights into what we predict for 2024. So giving some optimism and bringing that excitement back to the job search. Perfect. So, oh, how do I change my screen there? Perfect. Hi, my name is Natalie Lavery. I am the marketing lead at Climate People. As I just mentioned, Climate People is a climate recruitment agency. Essentially, we operate as any traditional recruitment agency would. However, we only work with companies and job seekers who are working or interested in working on climate solutions. Our business model is twofold. We work with both companies. We help them optimize their hiring strategies so that more people are interested in their jobs. The other side of that, we work with job seekers and we help them optimize their job searching strategy so that they can hopefully get a job in climate. Today's agenda is going to be a quick introduction presentation by me. Then we're going to do a 40-minute panel discussion. And then, as I said, we will save 10 minutes at the end for questions. So back to the funding that I just talked about, kind of what happened in 2023. First thing was industry growth limitations. In 2023, as we've touched on, growth was restricted due to layoffs in other industries and a little bit of a limited on-ramp into the climate sector. Also, startups faced hiring concerns. Lots of startups had challenges because they simply lacked experience in hiring, and a lot of their decisions were rooted in fear of making the wrong decisions, which led to extensive hiring processes. Also, companies that had planned growth in 2023 ended up having to reduce headcount due to funding freezes, which again led to extensive hiring processes and a preference for unicorn hires, which essentially just means that these jobs were posted, but they never really had any intention of hiring for that person unless this dream, unreal person walked into their door. Then also the climate industry, as you know, is not this niche little vertical. It spans the entire global economy. It's a repositioning of the entire global economy. So it's dips into lots of different industries, from transportation to buildings to food, a little bit of everything. And each of those different verticals have different hiring needs. And it can be really hard to put a one size fits all solution to all of those different verticals. And then lastly, some job postings got hundreds, if not thousands, of applicants. The one-click apply feature in AI last year made it incredibly easy to apply to jobs. So then hiring managers and founders didn't have time to go through all of those applications. It just was not within their capacity. So they ultimately resorted to their networks and were hiring people that they already knew and never even looking at those applications. So that was a bit of what happened, but what are some of those solutions and what can we expect in 2024? It's already looking a lot better. The funding prospects are already improving, so we're seeing a lot more of that, which is exciting. That takes the pressure off of hiring managers and founders. They can hire more. They don't have to have those extensive hiring processes. Also encouraging a strategic approach for startups. So encouraging startups to be really intentional about their hiring. If they don't have the capacity, if they don't have the resources, encourage them to rely on their network, to use agencies, whatever it may be, just being intentional of kind of some of those things we just talked about. And then the same thing goes for job seekers. Being intentional, a lot of job seekers approach the climate job search with a really wide lens. I encourage you to kind of narrow that down, pick a few solutions that interest you and work on those, focus on your transferable skills, and again, just be really strategic in your job search. So this quote here is kind of the summary of a lot of the things that we are going to talk about today. It comes from Climate Tech VC's 2023 recap report. And it says the 10 largest deals made up 24% of total climate investment in 2023. The main takeaway here is that at the later funding stages, the dollars were not well distributed. This meant the vast majority of money went to a few main players. So kind of keep that in mind as we talk about some of the other things today. And let's break that down a little bit more. So 7 of the 10 largest deals were in, 6 of the 10 largest deals were in battery innovation out of that 10 that I just mentioned. And all of the top 10 that I just mentioned were highly technical companies. So essentially, this just means that we saw a lot of heavy science and engineering roles and not as many business or supporting functions as we did in previous years. Also, those top 10 companies were all at scale phase. So that meant their technology readiness levels were an 8 or a 9. They got really large checks to scale their manufacturing facilities. So from a job seeking and a hiring landscape, or from lens, that just means that a lot of this money went to hard labor and mechanical engineering and roles, again, not in the business or supporting functions. Then lastly, that meant there was a few dollars left. So 2/3 of all other of the companies had to compete for a few dollars. This left mid to growth stage companies with minimal funding. So this is some takeaways from another recap report from last year. Emmett, one of our panelists, he'll obviously be able to talk to this more. This is from his company, Net Zero Insights, but they had their top 3 takeaways from last year, which was climate tech is getting a more diverse capital stack. As we just talked about, equity investment took a really big hit. So entrepreneurs had to turn to other opportunities like public funding, and non-equity funding was at a historic high of 34%. Also, there were lots of first-of-kind projects. They were at an all-time high. And lastly, corporates acquired historically high amounts of companies. Again, kind of makes sense given the tricky and convoluted funding landscape that we saw last year. All right, so the last thing I will say before we hand it over to our panelist is that early stage money prevailed last year. Pre-seed and seed stages were the only funding stages that didn't see a decrease in funding. And when we think of that from a job seeking and a hiring lens, that means domain expertise, resources, and headcounts are typically limited at this stage. So they're looking for candidates who have done this before. They're looking for someone with that experience. Again, makes it harder if you don't have that experience. And then again, alongside that, at this stage, we typically see less hiring and fewer positions. This is an early stage company. They're hiring one person. They're expecting them to wear a lot of hats and do a lot of different things. Again, less positions. So means less available opportunities for job seekers. So with that, I'm super excited to turn it over to our panel discussion. These experts all are going to be able to talk about some of the things we just discussed. And again, give us that rhyme to reason and help us see what we can expect in 2024. I'm going to let them further introduce themselves because they can do that a little bit better than I can. But up first, we have Stephen Zhang, who is the founder of Climate Tech List. He's going to give us a little bit of the job insights into what happened last year and what's happening this year. Next, we have Pilar Covaja-Lucena, who is the head of investments at Third Derivative. She's going to give us an investment lens and help us understand a little bit more about what happened on the company side and some things that they saw within their portfolio companies. And then last, but certainly not least, is Emmett Zietz, who is the head of, did I say it wrong? I knew I was going to, the head of ecosystems at Net Zero Insights. And he's going to give us some funding predictions and some of the things that they saw in a global scale last year. Perfect. So with that, I am going to stop sharing my screen and then we can open up the floor. Cool. Stephen, do you want to kick us off by quickly introducing yourself?
Yep. Hey everyone, it's Steven here. My background is in software engineering. So worked 8 years in data tools and actually started Climate Tech List as a tool for friends kind of in 2022 when the market was pretty different for white collar job seekers. It started as a tool to help my software engineer friends limit the number of choices they had to make because they were getting too many offers. So you probably don't hear about that too much now, right? And it's since grown kind of opposite to just aggregating as many jobs as possible. And so we have about 100,000 job listings over the last 6 months that we can kind of draw some insights from. So yeah, I'm the sole person who runs Climate Tech List.
Awesome. Emmett, you want to go next?
Yeah, sure. Hi, everybody. It's great to be here. Thanks for inviting me and using our data to kickstart the conversation. So I work at Net Zero Insights. Net Zero Insights operates a market intelligence platform focused on climate tech. What that means is we provide data, insights, and research to decision makers, most of the time investors, like their derivative. And really what we're doing is tracking all the climate tech companies on a global scale. And so right now our database features roughly 70,000 climate tech startups and SMEs. And we're doing research into what technologies they're working on, where they're located, what are the trends in the funding. And a lot of the kind of data that you were just presenting is from our kind of State of Climate Tech series, which we publish on a quarterly and yearly basis.
Awesome. Pilar.
Hi, everybody. Great to be here. I really appreciate the lens that this conversation brings to the climate tech space. I've been working on climate finance for the past 7 years, and it was only last summer that I transitioned to head investments at Third Derivative. And I've been looking at climate finance from different asset classes, different stages of maturity. And I think the unique role that we play at Third Derivative is really pushing the boundaries in balancing how capital flows to those technology solutions that are addressing the hardest to decarbonize sectors, recognizing that, when it comes to technology solutions, it's not only about being very savvy on the business model side, but many of the solutions that we have in the portfolio require, like deep physics, chemistry, biology, technology developments that face their own challenges when it comes to the pathways to commercialization, the need for longer research and development phases before they're ready to, get out there and implement their solution. So excited to have this conversation and happy to provide more color on that front. But yeah, really thrilled to be here.
Awesome. Well, thank you all so much for being here as well. I don't think I could have picked a better panel. It really covers all areas that we're hoping to get at today. So thank you again to all of you. Kind of going off of what you were just saying, Pilar, about the hard to decarbonize industries, that's something that I touched on quite a bit in my intro presentation. It is also a huge trend that we saw at Climate People. I guess, again, another little round robin approach to this question that we just did, but looking back at some of those challenges, like the one you just mentioned, what were some high-level trends that stood out to all of you? Doesn't have to be the same one, but just generally, what were some high-level trends about the 2023 funding and job market that stood out to all of you? Whoever wants to take it first can go for it.
I'll take a step first, talk about jobs. So I guess there's kind of a couple layers here. One is from the quantitative data piece and also qualitative side. 2023 was a big year for tech in terms of layoffs, like general, I would say white collar software tech, right? And that's kind of where a lot of the talent pool for the white collar jobs at climate tech, clean tech companies are coming from. And so you've seen this inversion of a job market where let's pick software engineering as an example, where, like I said earlier, people were getting dozens of several offers at least, for every, pretty good software engineer, to now you're competing against 10,000 folks who got laid off from Google and Meta, and also contraction in hiring because a lot of the, hiring capacity is is coming from funding that's contracted because of the interest rate hikes. But on the other hand, if you look at the blue collar jobs or the skilled labor jobs, a lot of the IRA funding, Inflation Reduction Act funding, is targeting those areas because it's more of like a political, like policymakers care a lot more about bringing those kind of jobs into the state just by volume. And also in the broader economy, you also saw like a contraction of the labor pool for skilled labor. So it was pretty interesting just to see. It's like a tale of like two job markets, I would say. And if you just anecdotally, polling friends who work in tech, who most their social network, let's say, are like white collar job workers, they would say, oh yeah, last year was a recession, right? Versus if you look at the numbers, that's kind of not what the economic numbers show, right? Because in their bubble, that's kind of what it felt like. So I would say that's like, to me, from the job seeker point of view, that's kind of the biggest story of 2023.
Yeah,
Maybe
definitely.
one thing that I would add as a starting point and a framing point of discussion, I really like the initial framing that you made, Natalie, in terms of initial presentation and the question of what happened in 2023. I think it's important to take a step back, and maybe the question is what happened in 2021 and 2022. Because from a financial standpoint, I think there was a convergence of climate actually getting on top of people's agendas and starting to be the horizon for many corporates, for policymakers, for investors. And then that combined with a pretty unrealistic financial setting where money was just flowing left and right to anything that was remotely promising, and people were just putting millions of dollars behind a deck presentation without no real traction or anything to show for. And I don't think that's necessarily, even from a job generation standpoint, and I appreciate this conversation because that's not like a lens that I tend to talk that much about in my day-to-day, but even from a job generation standpoint, I don't think that's realistic or desirable either in terms of a sustainable job creation opportunity. And I think we're facing now, to go back to your question and piggybacking on Stephen's comments, when we look at some of the trends that happened last year, is that we start to see companies that were that kicked off their fundraising journeys in 2020, 2021, that are now reaching scale-up phases. And one, it's a way to show and consolidate what are some of those models that were not necessarily as promising maybe back then. And I'm talking about industrial solutions, for example, or like we have a few companies in our portfolio, particularly addressing industrial heat, that have been achieving pretty amazing milestones over the last 12 months, also attracting more capital. And then when it comes to job creation, getting to that next stage where you're not only focusing on the tech development itself anymore, but you also need to bring different profiles and different skill sets to continue complementing the team and be able to get into project development and attracting the next stage of capital sources and thinking beyond venture capital as a single source of backing. And I think all of those dynamics are starting to show some maturity in some of those verticals that were pretty nascent 3 years ago. But I think it's just good to put a little bit of perspective. And I think, yes, 2023 was definitely a tough year on many different fronts, but I think it's just, I think it's just healthy for us as a society more broadly and as a community in the climate tech space to look at it with a bit of a broader picture perspective and that longer term trend that I think will start hinting into what we can expect in 2024.
Yeah, I think I can build off of that. It's definitely good to view the long picture. And I think one thing that kind of stood out to me was that, as was just mentioned, in 2021 and 2022, there was a lot of first-time investors. Everybody was like talking about climate tech and wanting to invest. And then in 2023, when there was this big tech slowdown, really, I think there was like the core climate tech investors who still had deals that they had been working on in the past and funds that have been around for a while, and they were still investing. And so when we compare the slowdown in the climate tech space to tech overall, it was less. Like the decrease in total funding was less compared to other sectors. And so I think from a job seeker's perspective, the way I think of it is just kind of job security wise. Like climate is showing that it's reaching a stage of maturity. Companies are raising from not just venture capitalists, banks are coming in, technologies are really at this deploy stage versus breakthrough innovation. And so I think, yeah, we the past 4 years have taught me like we never know what's going to happen. You never know what's going to happen in the world. But when we're seeing in, let's say, a recession or a downturn, climate being resilient, I think that's a really positive sign and outlook to keep in mind.
Yeah, definitely. When Eamon and I were having our conversations before this panel, that was something that he mentioned as like in the grand scheme of things, climate compared to other industries, it wasn't necessarily as bad. It definitely had some optimism. And I think that's something that I would love to expand on a little bit more. Does anyone else or Emmett, do you have further insights into why that was? Why is it that climate didn't get necessarily hit as hard, or kind of does it go back to what happened in early 2021 or whatever it may be? Anything else that anyone else can add to that?
Maybe I can just build on it super quick. I mean, I think everyone is really waking up around the world that climate is an important topic, and it's critical that we are solving this global issue. And one of the kind of major things that's happened is now there's price comparity of climate technologies with incumbent kind of dirty technologies, which in like the first kind of clean tech wave in the early 2000s, it really wasn't there. And so this kind of movement wasn't able to take off. But now we really have seen technologies scale and be successful, like solar and now batteries and now EVs. And so I think that's just all adding to it. And it's because of those, now we're seeing new industries around them.
Yeah, and I would just add, like, don't forget the government incentives, right? It's part of the climate consciousness part. Inflation Reduction Act, depends on what numbers you look at. It's like in the hundreds of billions of dollars. That's probably comparable order of magnitude to like total VC funding, like across everywhere. Obviously very different capital stacks. And then, one insight I think on there, I listen to a lot of energy podcasts, which is kind of adjacent to some overlap with climate. And they talk a lot about kind of the mixing of climate policy and energy policy with industrial policy. Like in the US, for example, the amount of manufacturing we have now is probably the highest it's been in like 50 years. And so, you're not probably getting that if you're just looking at like SaaS companies or, other technology areas that were affected by the tech downturn.
Yeah, maybe the one thing I would add is that it is truly about the tailwinds that have been supporting climate tech solutions in the last few years. And I think, the flow of capital in massive trends helped in that direction, even if now we're looking at that correction. So I think there's something good to say about that flow in the last couple of years. And I think that coupled with what Stephen just said in terms of policymakers taking a stand and actually putting the foot down and starting to hint not only at what has been decided already, but also starting to hint at what can happen in the future when looking at carbon pricing, and just hinting to the different players in the market that this is here to stay and that we should all change the way we think about business. And I don't think we're at a point where it's a given for everybody, but I think we have definitely seen many of those trends that have consolidated the role that climate tech has in terms of the early stages of venture development. But I think also the level of implication that you see of corporates, a little bit to Emmett's point, and I'm not sure if he has the data at top of hand, but you can see corporates, at least anecdotally in our portfolio, being a lot more involved, not only on like high level commitments that they would publish broadly, but actually putting dollars behind many of those high level headlines that they would advertise. And we do have pretty committed corporate partners in our ecosystem, and it's been very interesting to see also many of the conversations and deployments that have happened on that front over the last few years as well.
Definitely. Yeah, that all makes a lot of sense when you kind of think about it in that greater timelines and lens. Kind of, we were hinting at this a little bit, but do we anticipate some of these trends that we've already talked about, the things that led up to 23, are they going to continue into 2024? Are we seeing different things in 2024? Do y'all have any insights into how that translates or where we're headed? Obviously, it's going to have to be a prediction, but based off of the data that you've seen already.
I guess I can start because we're the data company, and we're coming out with a Q1 report in a couple of weeks. What we're seeing is these really big rounds. We call them mega rounds, for these mature companies. They're here. They're gonna stick around. Already, there's been 4 in this quarter that are making up 50% of the total funding. So these are, I think, again, a lot in the battery space. And then at the earlier stage, I don't know. I think it's up in the air. Like the Series A, there's still a valley of death, and I think we're still going to see that because it's hard to know which companies are gonna be the ones to succeed. But the later ones that are maturing, they're still going to get funding. They're still going to grow. They're really showing that level of maturity, I would say.
Yeah, maybe one reflection I'd share on that note is that, we're actually bringing on board our next cohort next week. And for those that may not know it, but third derivative, our sweet spot for the companies that come on board is pre-seed and seed. Sometimes when they are already on their Series A rounds, and then I think as of today, the latest number is that 20-ish% of our portfolio, it's already in like Series B, Series C levels that have been, evolving over the last 3 years that we've been operating. But one thing that I would say is that I think it's absolutely true that for earlier stages of development, it continues to be a bit of a struggle. And I think I would draw the line between, the technology risk associated to many of these solutions. Like I think when it comes to early stage funding, like there is technology risk, there is market risk to, figure out whether you're going to have customers or not buying your product and whether your value proposition is going to stick enough. And then you have regulatory risks that also come with it. I think we're seeing in very early stages many companies that are still struggling to prove how they're going to mitigate the technology risk that comes with it. And one of the things that we try to put a lot of emphasis on and how we engage with our investor network is try to address some of those perceptions around risk, because a lot of the technology risk is pretty real. But our founders have very clear ideas of how they're going to mitigate them and how they're going to be following the steps to try to get to the next technology milestone. But on the investor side, many don't really have the technical knowledge, the track record, or the right team in place, or the budget to go deeper into some of the technologies that will be making a difference from a climate standpoint. And we continue to see a little bit of that mismatch. So I think there's also a massive opportunity and maybe connecting it back to the job market for those people that can create that bridge between making the business case, understanding the technology, and really framing it as a way of value adding both on the startup side but then also on the investor side. I think that's also a massive opportunity, and I think that is a gap that we'll continue to see for better or worse throughout 2024. But I think it also opens a bit of a silver lining to continue strengthening the ecosystem and refining the type of skills that will help the big picture to connect the different pieces together.
Definitely.
I'll just add 2 more quick things to keep in mind for 2024. Again, back to Inflation Reduction Act and some of the government incentives in the U.S. and abroad. There's these things they're not immediate, right? So they take a few years to roll out. There's going to be continued rollout of these incentive programs as part of the IRA this year. And the big question politically is obviously what happens in the 2024 presidential election, and also like the rest of Congress. I think, yeah, that will make that, I guess that's end of the year, so it may not make too much of a difference on like 2024 in general. But if some of these incentive programs gets changed, that kind of changes the cost structure for a lot of these, especially later stage companies.
Definitely. Yeah.
I want to add one more trend
Yeah.
that I saw that just came to mind. like the importance that policy is playing is really crucial. And I'm based in Europe, and what we actually saw is not a lot. There were a select few companies that were actually saying, "Oh, the IRA is amazing and there's so much funding available." They're actually moving from Europe to set up shop in the US, really because of the incentives that exist. And I thought that was like super interesting to see, really because of the IRA.
Interesting. Yeah, yeah. Definitely makes a lot of sense. Awesome. Pilar, I want to go back to something that you were just talking about when kind of trying to find your skills and that big gap that you were just mentioning. I know when we talked a few weeks back, we're talking about like the importance of being able to tell your story and being able to identify your skills gaps and kind of that. Perfect. But can you expand a little bit more on the importance of storytelling in both in the lens of job seeking and founding? So like if you're trying to get more funding, how important is it to be able to talk about those skills? If you're trying to get a job, how important is it to be able to talk about how those skills are transferable, especially in those like harder to abate industries that we've talked about?
Yeah, sure. Maybe yeah, I think it's related to the comment that I just made in how sometimes for founders that are developing very deep technological breakthroughs, it's hyper exciting for them to talk about that very specific innovation that they've been working on. And sometimes, honestly, for the rest of the world, the key question is like, so what? Like, that's fascinating. And for some people, like, at Third Derivative, we love nerding out on whatever topic that many of our companies are working on. But at the same time, I think it is important for companies, no matter at what stage they are in development, to be able to translate that into the why should people care about this? Why is this important? And how does it connect with the bigger picture? And I think that's, connecting it back to the job market, like you may have founders that are hyper technical and would definitely use, the support, could use the support of people that would help, kind of push the envelope on that front and keeping nudging to make sure that the so what stays at the forefront of any, technological development, to see how that translates into a product or a service that can also be eventually be sold and, generate revenue for the company as well. And you see it as well for founders that maybe are more, third time founders that exited companies in very different industries, and then they got, the climate back biting at them and then wanted to transition into the space. And then they may be great at storytelling, but then, creating a massive need for the more specific and technical roles that will, eventually also execute on the solution. So I think we see this unique, combination of needs for strong storytelling on the so what of the solutions, but then also the deep technical understanding. And people that can jump between the two will have a massive advantage when it comes to eventually also pitch it. And I think this is something that we talked about, how I do see a massive opportunity for people to also create their own roles, given that many of these industries are starting to be nascent. And so don't be afraid to like talk to as many people as you can. Some roles may not even be drafted yet, that you could actually, make a value proposition for them. And given that companies are indeed, many of them, constraining runway, particularly for those that are in earlier stages and struggling with the funding dynamic that we were mentioning before, I think the more, of a business case that you can make for your own role, that can be a great opportunity. But I think also understanding that there might be opportunities to engage on a pro bono basis at the beginning and kind of nudging and bringing one foot to the door as you consolidate what the value proposition for your particular skill set is, particularly if you're looking at, transitioning into a new industry that you had not been working before.
Yeah. Does anyone else have anything to add to that as well, in terms of just even like the creating your own job and that whole thing and how that translates into different funding? We always tell people is to time their search with the funding stage of the company. So like if you're in a more supporting role, should you be looking at companies with later funding stage? Should you be looking at earlier stages? Any suggestions from any of your lenses on as to where people should be looking to create their own job, or if they're looking for a job where their best chances kind of are. It depends on the industry. Any insights there?
Yeah, I'll add a point. And just to caveat, this is based on anecdotal, like just talking to a lot of people. There's not enough like concrete data in my job's data to support to like support either way. But it does seem like, the later stage the company, whether or not they recently raised funding, at that point it's kind of it's an operationalized organization. So what they care about, like let's say they're hiring for a mechanical engineer. Well, the first thing they care about is, are you a really good mechanical engineer? Do you want to work here in this location or whatever? And then it's like, all else being equal, are you mission aligned in climate, right? And I would say that's especially true for like the more like in the news areas of climate tech, like energy or let's say EVs, right? That's an area where like they probably, a lot of the employees don't necessarily, yeah, it's just not a primary thing. So if you're doing the tailored job search, like the pitch thing, I would say that probably works much better at the earlier stage of the company, and you'll also have more access to the founders.
Yeah, we also don't have data on that, but I can confirm from a personal level that all of that is good advice. I would say Net Zero Insights is ourselves a startup. It was kind of my first job transition into climate, and that's exactly how I got the job. Is I networked with the founders, I did my master thesis with them, and then created a job that my skill set was really suited for. And so, yeah, getting creative and being able to articulate, where you can add value, especially at the early stage, building the relationships with the founders. I mean, I think it's great advice, and it worked for me.
Definitely. Yeah, likewise. So definitely think that that is something that I've seen from a lot of job seekers as well, is super influential in the early stages. Cool. So kind of shifting gears here, going back to a question that's a little bit more tailored towards like the funding and then applying that to jobs, is what recommendations do all of you have based off of your day-to-day jobs, the reports that you all recently released, but what recommendations do you have for both job seekers and for hiring managers or founders going into this new year? If you could give them one piece of advice, what would it be? Maybe two.
Okay, I'll start. Up to one is kind of a general piece of advice for all job seekers, no matter what industry, climate or not, is really operationalize your job search. Especially again in these like kind of white collar job roles in the US, at least it's quite competitive right now. And I think most people don't treat their job search as a job. Like, but you should, right? Because that's the most important thing for getting a job, is doing a job search well. And in fact, it's like the amount of time concentrated in that job search is probably more impactful in the short term. Like the 3 months is going to determine like 1 or 2 years versus like, being actually at the job. So really operation, like use spreadsheets, like talk to, don't leave stones unturned, essentially. And then the second piece of advice is, being in the climate tech world, the climate tech media world, listening to a lot of VC reports, like for every, let's give an example. Let's say there's a, seed stage startup developing better like thin film solar, and they're hiring for, a chemical engineer or mechanical engineer, and you're a mechanical engineer. That's a great company. You should like definitely go apply there, but also look at the mature companies who are not, they're not raising venture dollars. Those are also opportunities you can look at, but they may not be, you may not hear about them in the climate tech ecosystem. You might have to, search clean energy startups or like solar startups. So that there's like tens, or I don't know about tens of thousands, but hundreds, if not thousands of solar developers in the world. They're all operating in a sense on clean tech 1.0 technology, right? The cost curves for the solar they're deploying kind of came down enough 10 years ago. So they're not going to be like venture funded companies. So you might not hear about them, but they also need engineers. Actually, communications is a big one. Turns out to get buy-in from local communities is one of the biggest roadblocks for deployment of solar and renewables in the US. So yeah, that would be my second piece of advice.
Yeah, I will emphasize that last one that Stephen wrapped up with in terms of and connecting it with, understanding and assessing what's your risk profile when it comes to job searching, because I think that's important. And sometimes we all get, like idealistic views of what the ideal job could look like, and then it just so happens that it's in a more risky or in a riskier position than maybe going to a more established company that is doing similar things. So that could be, in the downstream of whatever company we're looking at. So anyway, in the operationalization of the search, like factoring in what's your risk profile and what is it that you're looking for in terms of experience, but then also stability. I think those are things that are pretty legitimate and important to flag. And I think the other piece of advice is if you're going into early stage ventures, I think it's a fair question and you should absolutely ask what's the runway of the company to really understand, how that opportunity matches your risk profile, and then also understanding, whether you truly believe that you can contribute to, supporting that company as well from a financial standpoint, generating additional revenue or looking for additional partnerships, and going back to the pitching your own job, like making sure that you fully understand what the current situation is to create value out of the existing opportunities, but then also be hyper aware of what the risks are.
Yeah, I think that was all really great advice. So the only one thing I would add is like I strongly believe in-person connections and the in-person networking that you do really has a bigger impact on the people that you're meeting. And so yes, get operational, but not only online, also offline. Get out there, talk with people. That's what I would say would be a good strategy.
Definitely. Yeah. I couldn't agree with any of that more. So something I again want to switch gears to keep doing that, but I want to cover, I feel like we're covering a lot of topics here. But something I mentioned a lot in my intro presentation was the increase in the number of technical jobs and how the technology readiness level of these solutions is high. So we're hiring a lot of like mechanical, physical type people who can work on those solutions. Do you all think that this is something that we're going to continue to see in 2024? I know, Pilar, you mentioned that there's an influx of like those physical technologies within your portfolio company. You've seen that. Emmett, have you seen any data to support kind of what's happening? And then Stephen, Leslie, I saw that in your report that you released, the number one job was sales. So that's kind of counterintuitive to seeing more of these technical type roles. So any insights there? Any thoughts on all of that? I know it was a really long-winded question.
I guess I can start. I mean, I think I can't touch on the sales side because I'm not sure what's happening there. But on the technical side, I mean, climate is physical. Like we need physical solutions. We need more engineers. We need atoms built. So I think as companies scale, like that will always be a need. But I think maybe from a job seeking perspective, like if I think about direct air capture, there's only like a handful of people who are like experts in developing a direct air capture plant, but maybe you have mechanical engineering experience in something completely different. Like I think there's a lot of transferable skills that can be applied. And so to not get deterred from like the climate technical side of it.
Yeah, okay. I'll
go
go
ahead.
ahead.
No,
Okay.
go ahead.
Sounds good. Yeah, so I guess a couple things there. So I think Natalie referred to a report that I published yesterday, and analyzing the last 6 months of jobs data and like by title, right? What are the most common titles that show up? Sales is the number one. I think it's like 4,000 compared to like engineering is like all the engineering is like couple thousand. But I would say part of that is probably because a lot of these climate companies are doing B2B sales, right? You're selling EV chargers to companies who are installing EV chargers, or you sell batteries to automobile manufacturers, stuff like that. So those kind of businesses are just going to be more sales heavy. And then specifically on the technical side, I do see anecdotally and from the data that this resurgence of like the physical engineer. I would say, coming from the software tech world, right? Like the tech world, when people just say tech companies, like software engineer was kind of dominant over mechanical engineering, electrical engineering for the last 10 years. A lot of at least in the US, the production was of bits, right? And then it's only the last 2 years, especially in climate tech, that we're going to have to build physical things. So it turns out, I had friends who like went from electrical engineering to software engineering to have better job prospects. And now it's kind of inverted. Like the electrical engineers that I know have a lot more kind of options versus the software engineers who are, in a sense, like commodified, especially with AI now. And yeah, I don't think it's gonna like take the job, but anyways, it definitely has an effect. So if you like looking at the jobs data from Climate Tech lists, like the hardest to fill by number of days a job posting is listed. That's kind of a proxy for that's the best we can do for like how hard it is to fill, are the hardware engineers, mechanical engineers, and the chemical engineers, right? Those are like maybe 10-20% longer time than some of the other roles. So yeah.
I mean, on my side, it is interesting to actually hear the data on the sales jobs. I had not had access to that data until now. At the same time, it's not surprising in terms of the volume, given that, connected to the trend that we were discussing earlier, when funding dries out, one of the things that happens is that investors want to see traction a lot more than they wanted in 2021, at the beginning of 2022, maybe also. And so what ends up happening is that, particularly for hardware-based technologies, founders are faced with this conundrum of, when do I stop, pivoting or iterating on the hardware, and when do I start selling to gain traction so I can get funding to continue iterating on the hardware piece? And I think that is a nut that we're all still, trying to figure out how to best crack it. But I think it's important to realize that it's healthy, again, from a trend perspective for the industry more broadly, to go back to those fundamentals and focus on, making sure that the value proposition is there and that there are customers willing to pay for it. And so, would be curious, Stephen, I don't know how nuanced the data is in terms of the stages of the companies that are advertising these positions, because yes, definitely, I can, again, intuitively, not necessarily because of the data, intuitively, it's relatively easier to understand why, you can train an engineer to do sales, but it's really difficult to train a salesperson to become an engineer that can work on a manufacturing plant. And so again, intuitively, it all makes sense, but I wonder whether we see trends also based on the stage of development of the companies, and how much of that is also connected to their ability to access additional funding so they can continue growing and opening up different types of roles. I think that would be an interesting question to dig deeper into, but I don't think I have, the data or enough content right now to further discuss. But anyway, just food for thought for everybody.
Yeah, it's a great idea. Maybe the next event I can join my data set with Net Zero Insights, and we can look into that.
Yeah, we'll get back to you.
I was gonna say we'll host the next one in a few months. We'll circle back to it. Awesome. One final wrapping up question. Somehow time has already flown by. Then I want to save time for audience questions. But what are you most excited about in 2024?
Yeah, I'll start. I guess it does seem like kind of the like huge amount of layoffs has subsided, at least for now. The interest rates phenomenon, it's I guess that's kind of like baked in now instead of a shock to the system. So from my end, just from like the number of companies asking to post on Climate Tech List as a proxy for like how difficult it is for them to hire has been going up. So, good news for job seekers, I would say, especially the non blue collar job seekers, right, who are the most of the people using climate tech list. And then also from a higher level, the technologies with the cost curves coming down are just, they're continuing to come down, especially solar, batteries, hopefully heat pumps. And so that just means more deployment of these technologies and more interesting things, startups can do to help people do these deployments or come up with even better versions of them. So that's really exciting to me.
I'm excited about 2024 being the beginning of that consolidation of the industry more broadly. Also from a funding standpoint, I am excited about the amount of innovation that is happening, and I think many of the trends that we saw in 2023 have continued to trigger, investors who have to think differently about their investment frameworks. How do they assess risk? How they understand technologies, but then also how can they provide different solutions based on the risk appetite of the resources that they have under management. And so I am excited by the amount of innovation on that front and the creativity flowing in the space, while pushing for a little more robustness around how we think about the different verticals when it comes to investing, and we try to avoid a bit of a bubble again.
Yeah, exactly. I think that I would build off of that. Like, there's been so much conversation about the climate capital stack in the past year or 2 years. Everyone's thinking about really how do we finance these solutions, because it's clear that we need new ways and need to be creative and need to involve many different stakeholders. And so I think there's a lot of work that's going to be happening in that area this year, and I'm just kind of a bystander, excited to see how it unfolds and what comes of it. Yeah.
Awesome. Definitely. Perfect. Okay, so we're gonna open it up for audience questions now. If you have a question, feel free to use the raise hand feature. Click on reactions, raise your hand. I will call on you and you can come off of mute. We have 6 or so minutes to ask any questions that you have. You can also drop it in the chat if you would rather do that. Well, while we wait for someone to raise their hand, we do have one that popped in the chat. It says, what are good ways to find open positions for later stage or non-startup climate companies? I know a lot of laid off engineers, but they're skeptical of joining a startup due to the potential for another layoff.
I could take this one first. So I also run a layoff data website, just randomly unrelated to climate. So I get a lot of exposure to layoffs. And unfortunately, I think it's just it was kind of taboo to do layoffs, especially for the top tech companies for many years. I think Google had not done a layoff in like 15, 20 years, not even in the great financial crisis, or it was really dot-com boom. But now it's like so common that like it's not really a big, or media doesn't really pick up on it unless it's the big company. So I don't know if like avoiding a layoff is possible for either, whether you join a big or small company. I think it's just probably a way, like you just kind of have to like figure out contingencies ahead of time. You can do some predictions ahead of time, like, hey, how is the financials of this company doing? If they're cash flow positive, they probably won't do a layoff. Although maybe they want to like juice their margins because they're gonna go public or something, right? And now it's not taboo to do a layoff, so it'll happen. So I don't know. That would be like my number one piece of advice, is like not kind of take the layoff picture out of it because it's already going to be baked in. I guess you could start your own company and then you could you would avoid that problem. And in terms of like the larger like the more legacy companies, I would just say use different job search tools, right? If you're searching like the various VC job boards, which Climate Tech List aggregates many of them. Like we have all the lower carbon and breakthrough energy venture jobs. Obviously, like if Enel, which is a big energy developer that's public, they're not going to post their jobs on there. So I would just search Google. Google job search is pretty good. Obviously, recommend using Climate Tech List as well.
Awesome. Anyone else want to add to that? I want to move to the next question. probably next question, I guess. Okay, cool. William, you want to come off mute and ask your question?
Sure. So you guys talked about the top verticals that got funding were in the energy and transportation spaces last year. You mentioned a lot of big battery deals. Do you see that trend continuing this year, where energy and transportation are really dominating the growth in this sector?
I guess I can touch on that. Yeah, I think energy for sure will. It's just the biggest sector and the most happening. Transport, yes, I think it's very tied to energy, especially in the battery side. So I would say yes. What I'm hoping to see more is really more happening in the built environment. And like that has historically been underfunded compared to how much emissions come from the built environment. So on a personal level, I'm hoping we see more in the built environment, and there's signs that we're starting to.
Yeah, maybe one thing I would add there, I think it was Climate Tech VC that published the report from last year also, and one of the graphs that they included that very much resonates with our mission author derivative illustrates how capital has been flowing in comparison to the emissions associated to that particular vertical. So, industrials, for example, has traditionally, emitted 35% of the emissions globally, but technologies or solutions in that space have only been attracting 5% of funding over the last few years versus mobility or transportation that account for 15% of the emissions that has been attracting 50% of the capital in earlier stages. I think they already published data around industrials and the built environment starting to attract a little more capital over 2023 relatively to previous years. And that definitely is also something that we are very much pushing to do and strongly believe that the investment space and ecosystem should get a little more nuance in terms of understanding the climate potential together with the market opportunity that comes with addressing some of those verticals that emit the most, and these are industrials, built environment, and the like.
Yeah, definitely. That makes a lot of sense. Cool. We have time for one more question. If we didn't get to your question, I'll download the chat. I will add you or send me an email. If we didn't get to your question, I'll drop my email and we can make sure we get you an answer to that. But the last question that we have is, what is the best way to transition from academia, so climate research, to industry, since most of them require industry experience? Anyone have any insights there?
Probably just kind of the standard. Like I've had a few users of Climate Tech List who were professors and then they got jobs. So actually send me a LinkedIn request and I'll see if they're willing to talk. And you could do search on LinkedIn, right? Like people with PhDs who work at, climate tech companies or whatever. And I think it's pretty much the same as any other job search, right? Like you have to present that your skills are immediately relevant. So the closer you are to what the company does, like let's say they're doing climate risk forecasting and you do like atmospheric modeling. Well, that's probably pretty similar, right? Like that's going to be a more direct line through. And then networking and trying to get like a inside way to talk to the hiring manager directly instead of like applying directly.
Definitely. Yeah, goes back to what we were touching on with creating your own industry or your own job and reaching out and doing the networking. Awesome. Well, somehow, again, we are already at time. Keep your eye out for a follow-up email. I will send a link to the recording. I'm going to go back and rewatch it. I feel like it's so much information that it's just hard to digest in one sitting. So feel free to go back and check that out. I will include links to all of our incredible panelists' LinkedIn profiles and some of the resources that they mentioned today. So thank you, everybody, for spending this Thursday with us. Pilar, Emmett, and Stephen, thank you so much for your time. I learned a lot, and I'm sure everyone else did. We will see everybody hopefully at Climate Career Week in 2 weeks. Thanks, y'all.